The U.S. is teetering on the brink of a trade war after President Trump announced hefty tariffs on imports from key trading partners. A 25% tax will hit goods from Canada and Mexico, while Chinese products face a 10% tariff. These measures, set to take effect just after midnight on February 4th, have triggered swift backlash from all three nations. Canadian Prime Minister Justin Trudeau vowed to retaliate with 25% tariffs on $16 billion worth of American goods, warning that these actions could endanger American jobs, particularly in auto manufacturing, and raise costs for consumers on essentials like food and gas. Trudeau urged Canadians to favor domestic products over American ones, suggesting they swap Kentucky bourbon for Canadian rye and skip Florida orange juice. Mexico's president also pledged counter tariffs, condemning the Trump administration's accusations linking Mexico to drug trafficking. She argued that the U.S. should focus on combating narcotic sales within its own borders. China criticized the tariffs and promised to respond with countermeasures, but left the door open for negotiations. However, Trump's executive order allows for even higher tariffs if retaliation occurs. Small business owners and economists are sounding the alarm about the potential fallout. Prices on cars, lumber, clothing, and food are expected to surge. The head of a trade group representing major Canadian automakers warned that North American car production could grind to a halt, risking American jobs. Economists predict that tariffs could drive up the cost of everyday items. The U.S. imports over $45 billion in agricultural goods from Mexico, including tomatoes, bell peppers, cucumbers, and avocados. 90% of avocados consumed in the U.S. come from Mexico. Gasoline prices could also spike, with analysts estimating an additional 30 to 70 cents per gallon due to tariffs on Canadian crude oil, which accounts for 70% of U.S. imports. Car prices, already near record highs, could soar even further. A $25,000 car from Mexico might cost $6,200 more if importers pass on the tariffs. The 10% tariff on Chinese goods could also increase prices on toys, electronics, and clothing. These rising costs could stoke inflation, complicating the Federal Reserve's ability to lower interest rates. This might keep rates on credit cards, home loans, and mortgages higher for longer, squeezing consumers even further. As tensions escalate, the economic ripple effects of this tariff battle remain uncertain, but the potential for widespread disruption looms large.